Hello everyone and welcome to the Value Playbook channel where we dive into all things value investing. We live in an exciting age of technology where anyone can invest into stocks from the comfort of their home just by using their phone, which is amazing, but it also turned investing into this strange thing where we see stocks like AMC or GameStop go up 50 or even 100 times in a matter of days just to crash back down in the next few. In my opinion, this type of investing is nothing more than gambling. It can be exciting, but it is extremely risky and it has nothing to do with value investing. So what is value investing? We hear this term all the time, but what is it actually? Well, at its simplest form, it is an investment strategy of buying something for less than it is actually worth. Here's a great quote from Charlie Munger, who was a great value investor and the vice chairman of Berkshire Hathaway. Munger was close friends and a longtime partner of Warren Buffett. Just listen to what he has to say about value investing.
Well, you got to remember that in our way of thinking, all intelligent investment is value investment. Because why would you want to buy something which wasn't worth as much as you were paying for it? And who wouldn't like buying something for less than it's worth? When people talk about value investing, you're always a value investor.
So as you can see, Charlie Munger compares all intelligent investing to value investing. But the key is to buy something for less than it's worth. For some strange reason, people often get excited to buy a stock that is actually going up in price. Imagine if the price of a TV or a car that you wanted to buy suddenly goes up in price. Would you still be eager to buy that car or the TV? When it comes to consumer goods, we hunt for bargains and look for the best value. Yet this logical approach often seems to disappear when it comes to stocks and investing. So in value investing, we use the opposite approach. Basically, we look for stocks that are undervalued instead of the ones that are trending upward. It's all about finding bargains in the market that other ones might be overlooking. Many investors mistakenly separate the stock from the business it represents. Let's break it down with a simple example. Imagine your friend offers you to buy his ice cream stand business. And let's say the business made $100 last year and is expected to make $100 each year for the foreseeable future. Now, think about how much you'd be willing to pay for this type of a business. Would you pay $1,000? It would be a 10% annual return, which is fairly attractive. Would you pay $500? Now that sounds like an excellent deal, right? You would be getting around 20% annual return. Now, would you pay $100,000 for this type of a business? Well, that seems unreasonable, right? It would take ages for you to recoup your investment. The same logic applies to the stock market. When investing to stocks, you're buying a piece of a business, not just the ticker symbol. It is crucial to evaluate whether the price you're paying reflects the value of the underlying business and the returns you're expecting to make. From the first glance, value investing might sound simple, right? Buying stocks for less than they're worth. But there are common pitfalls that new investors tend to fall into. Let's highlight a few of them. First, focusing on price, not the value. Many beginners confuse the stock's low price to it being undervalued. But the stock being cheap doesn't necessarily mean that it's a good buy. Actually, you need to understand the company's fundamentals and make sure it's undervalued compared to its intrinsic value. The second mistake an investor often makes is ignoring the company's long-term potential. Sometimes people get caught up in short-term market movements or quarterly results. But value investing requires long-term perspective, meaning you should look into how the business is going to perform for the next long future, not just the next quarter. Another really common mistake is lack of patience. Value investing is not just a quick win strategy. Sometimes it can take months or even years for the stock price to reflect its actual value. However, many investors tend to lose patience and sell too early. Finally, the fourth mistake that is commonly done by investors is not doing enough research. Successful investing demands thorough research. It's not enough to just skim the headlines or listen to tips. You have to dig deep into the company's financial statements, understand the company's competitive position, and look for any potential risks. Just by avoiding these common mistakes and keeping a long-term mindset, you can significantly increase your chances of success as a value investor. So what does this all mean for you as a value investor? Value investing is all about taking a disciplined and patient approach. It's not about chasing the hottest stock in the market right now or predicting the short-term market movements. Instead, it's about understanding the underlying business behind each stock and making sure you're paying the right price that makes sense based on the company's real long-term value. When you adopt a value investing mindset, you're actually looking for opportunities where company's stock price doesn't reflect the true value. And this could be due to a multitude of reasons. Temporary market fluctuations, negative news cycles, or simply being overlooked by other investors. But for you, it creates a perfect chance to buy a quality business at a discount. And then you can patiently wait till the market catches up to its real value. You have to remember, value investing isn't a get-rich-quick strategy. It's a methodical approach that focuses on building wealth in a long-term period. By buying businesses that are fundamentally sound but are currently undervalued, you give yourself the best chance of achieving strong returns while managing your risk. So this is my view on value investing. This is how I see it. And before I wrap up, I would really appreciate your support. If you enjoyed this video, please subscribe for more content like this. If you have any comments, suggestions, or improvements, please don't hesitate, leave them in the comment section. I mean, this is my first video, so your feedback is really valuable to me. But I guess what I really want to say is thank you. Thank you for watching. Thank you for sticking till the end of the video, and I really hope to see you in the next one. Bye.